What's up, people? We back. We back for another trading analysis session on Australian dollar. How everybody doing? We're about to get right to it. Let's zoom in a little bit on these charts. Here recently, we did get a bearish engulfing, pretty much after we filled halfway through this, almost halfway through this whole bearish move, but for sure halfway through this first initial gap, this price gap that we're starting to fill up. We have another one here, basically all this clean traffic we can fill up throughout the week, potentially. Um, as far as the bulls are concerned, I'm still holding a tester from the 23rd. That was Thursday. And we have this other entry here on this engulfing. It's a bearish engulfing. Like I said, after we rejected this midpoint of this initial price gap on these candles. And they have indicators to kind of show you that, but I mean, that's just a good rule of thumb, just based on like Fibonacci, like the 50% levels of any type of significant gap or price gap that the market creates from some strong moving volatility, as far as like we probably was just on these past 2 days just strong with the bearish movement, so that's what allowed price to leave in the fashion that it did from one price to another. It left support or resistance or whatever you um, very rapidly, and left a nice gap for us to fill. And typically, in these incremental gaps that you see in the overall move, the bearish move of this like clean traffic that we call, with no, pretty much no structure, just a clean move to the bearish side or a clean move to the bullish side, like you see here, and like you see here, and somewhat here. Those areas typically will get retraced back into that zone, bearish or bullish, typically about 50% of the range. Most of the time is a good area to start looking for, reversals, just like how you see here. Um, we basically take these entries based off of just the past and how they work out. These engulfing entries that we take, I could say blindly. I mean, there are some setups that you can take just to hold true to the setup, but you pretty much know it might not be the right move. Say, for instance, you have like up here, you have resistance. And if we get a bullish, meaning going to the upside, engulfing setup, if we get that near resistance, chances are that it might not continue bullish, being that it's at resistance, especially if it's at a strong resistance. It's been tested once, or really twice, more than once, uh, two, three, maybe four times max. The stronger, the more the number, the stronger the resistance or support is. So once we see those rejections and we get a opposing engulfing setup, you can't put much faith in that trade. Like I said, you can take it based on the setup, but I would go extremely light on those. Like, use a tester only, and just be prepared for the reverse trade going in the trend. You know, you don't want to be going counter trend trades. You know, at the height of a bearish trend or a bullish trend. You don't want to be taking buys, at extreme lows on bearish trends. You don't want to be taking sales. You don't want to be extremely, selling down here at the bottom. Now, granted, yes, this is a sell off engulfing, and yeah, it is near based on what I'm looking at now, from the time I have from what's the 20th? What was that? I think that was Tuesday. It was Monday. So basically, this whole previous week, Monday, 10 a.m., this is pretty much near, bearish structure or support, I would say. And if I zoom out on a higher time frame, we'll get a better idea to see how much life we have into these cells. And as you can see, we do have more life. We already took out this structure here. We took out these lows with this bearish 4-hour candle that closed at 9 a.m. on the 24th, which I believe that was Friday. Yeah, that was Friday. So we took out this structure here on Friday. And the next levels would be in this area here. And that's pretty much where I have my take profit. I mean, I could push it down a little bit lower. I do have some room, but nonetheless, this would be the next level we'll be attacking these lows. But you want to target up near, in this area, kind of in the crevice part of that swing. So if you're trading bullish, you want to take profits up here, right in this swing point. You want to kind of get it right up in here, right up in the armpit. So nonetheless, that'll be the targets on the higher time frame. But I was just proving to show that we do have more room for sales. So with that sale being a valid sell on a 1 hour, it may look as if we're near support on a 1 hour, which can be true. I mean, we did get a lot of rejections from these prices. But looking at the larger time frame, we have stronger support down here. That's not as strong. It's on a 1 hour time frame, but on a 4 hour, we got stronger support down here at the 65.90, 65.80 area. And right now we're at the 66.50. So we got a good 70 to 80 pips of potential profit that we can grab. And we know that the Australian dollar on average moves about 80 to 100 pips right now. I mean, it's increasing as time goes on. But we know that on average it's moving by 80 to 100 pips. So with that being said, yes, it's a possibility we could get that move, within a 24-hour period, meaning Sunday 6 o'clock to Monday 6 o'clock. We could see that. We'll probably get more of a pronounced move with more volatility during the London and New York crossover around that 7 to 10 o'clock in the morning time frame. And that'll be the best opportunity to look to see where a trend can take us. So yeah, even if we look right here, we got a daily engulfing. Just came off of this engulfing, got 2 wick rejections off of these highs. That was on the 22nd and 23rd. So that's even more confirmation that the bears are in control, even though we did get large pushes up here, which did create equal highs. That'll be considered some liquidity above here, which it didn't break above this consolidation. What we talked about Sunday last week on what was that? 17, 18, 17, right up in here. I think Sunday we talked about price coming into this consolidation box right here that we had late February 23rd through beginning of March. And as you can see, not only did we reach that area, but we rejected heavy twice, both days, the 22nd and the 23rd of March. Ultimately rejected this old consolidation area. And not only did it reject it, but it created a color change engulfing setup on the daily, following a previous engulfing setup on the daily that we see here on the 21st. So we are continuing with trend for the bears. And if we take a step back and think about the fundamentals with the market increasing the interest rates, that's going to strengthen the dollar. And if the dollar gets stronger, the Australian dollar pair should continue on a bearish trend. Because if the dollar is stronger, then that means it can purchase more Australian dollar. It's more stronger than the Australian dollar, so it's more powerful. Thus meaning it's more valuable and it can purchase more Australian dollar with $1. Hence the fact you will be seeing a descending number as we trade lower and take out lower lows. So if we look at the year, and I'm gonna just note this, we're in, which is March 26th, especially coming out these engulfing bearish candles on a daily. I'm gonna note that we're gonna take out major lows, which is this? No, that's not even the COVID lows. Let me see. It was 20. So yeah, that's down here when COVID hit. So we pretty much attacking here. So yeah, I'm calling it towards the end of the year. And shit, this the daily, so this could definitely hit this next month. So I'm just gonna call it. We're definitely attacking these old lows at 62, 62.60, 62 flat, 62.50 to 62 flat. So I feel like the charts are definitely set up for us to continue in a bearish pattern, especially with the rejections we got out this old consolidation. We got bearish engulfings, and we have newly created lows that are looking like they're going to be tested. And if we follow with this trend from the old yearly low, which was on January 2nd, recently got broke March 6th, and now we're starting to retest that low that was created of 65.60, 65.70, 65.60. So everything is lining up for bears to continue. I'm gonna call it, like I said, old lows of 62 flat. Um, Based off the daily, I mean, even if we went with this structure here and we printed that here, how long did that take? That was February to beginning of March, pretty much about 30, 40 days. So, yeah, I could definitely see around May, beginning of May, we could definitely be, it'll be nice to potentially be reaching these lows. And hey, I'll keep these testers on and we'll be up 500 pips. Oh, well, not 500 pips, definitely 100. Or is it? Oh, no, actually, that's 350, 400 pips. So close to it. But yeah, that's more of a swing situation long term. But overall, we're looking at setups within the daily and weekly structure that we can find on the 1 hour. That's how we scout. We don't scout 1 minute, 5 minute. Those are sweet setups if you want to get in and out, but it's that's video games basically. You're trading around that time frame. That's playing video games, which I really don't. I don't mind. I understand why people do it because it's very exciting. It's a thrill. In the gambler's mindset. Quick returns, but If you take a step back and look at the larger time frames, you'll see how you can get more accurate and more defined setups that actually flow and follow trend. So let's see, we're gonna move on and we're gonna quickly jump to the news right quick. Well, we're gonna let this next 15-minute candle close and see, you know, how we're looking on these this setup that we're currently in. Let's see. I'll quickly just look at the 15-minute right quick just to see what are we reaching for. Well, I do notice this. This is the first thing that stuck out to me. Besides all this, this is structure, but potentially we probably will be. We could be trading as high as up in here to kind of clear this traffic out. You know, if not higher, there could be potential. I mean, we do have support here, followed by a nice little smaller structure of support here. So we could be reaching as high as that, but I do see this. This is what sticks out to me. This engulfing on the 15-minute. You know, it's not as beautiful as far as coming straight off of. You know, support is kind of continuing on this little consolidated bullish rise that we have, but it is a very strong and defined rejection from this little slight sell-off. So I'm not going, you know, just pay this no mind. You know, you gotta pay attention to the structure and what's actually happening. So that is something we're gonna take a closer eye at. Like I said, I got stops above here. Um, and actually, I'm gonna raise this just a little bit, just to put me in a better position to potentially not get stopped out on this sale. No, Sprocky. Dog want to get out. But yeah, we're gonna let that ride. Yeah, we'll see how that plays out. Right now, we're gonna take a look at the news and see what we got coming out for the forthcoming week. Yeah. Alrighty, we are logged in. Bam. Let's see, economic calendar. Good old Pino. Okay, let's look for the week. Monday, we got retail sales month on month, month over month. And just know an easy way to determine for like fundamentals. If the pair you're trading, the first currency that's in question of the quoted pairs, you know how we trade the Australian dollar, so meaning the Australian dollar, AUD, um, that currency, if looking at the chart, if you follow those news reports, if you get a high number, meaning a bullish number, then the charts will be bullish. Typically, if you get a lower number or a bearish number, then the charts will be bearish. Being that that's the first number in the quote. The exact opposite happens for the second currency in the quoted price, meaning the USD, because we trade the Australian dollar, US dollar pair, which we call the AUD dollar or the Aussie. So the second price The second pair in the quoted price is going to be the exact opposite of how I explained the first uh, currency. So the USD, if we get a bullish or a high number for news, then we should see a sell off in the market. If we see a weak number or a low number in news, then we should see a rise in the market on that pair because it's second in as far as the quoted pair, second in line. And that's just a quick, you know, idea on how you can look at fundamentals and how to potentially enter a trade once you see what news is and what gets released. So we got Australian dollar Monday retail sales. That's Monday evening, 6:30 p.m. Tuesday, we got goods trade balance for the USD 7:30 in the morning. Then we got monthly CPI indicator at 7:30 for Australian dollar. That's on Tuesday. No news on Wednesday. Thursday, we continue with jobless claims, continuous jobless claims. Um, Previous is 196 for jobless claims 4-week average. Continuous jobless claims previous was 169.4, and the consensus is 169.7. So they're looking for an increase on the continuous jobless claims, meaning more people from last week are continuing. The 4-week average also seeing an increase. Initial jobless claims, also they're expecting to see an increase. So they say they're creating jobs, but people are claiming no job. I need my bread. So that's what they're expecting. We'll see what the number is once Thursday hits. And then Friday, we have personal income, month over month, personal spending, month over month, core PCE price index, and Michigan consumer sentiment. What is this core PCE? It's at 7:30 in the morning. Core personal consumption expenditure price index in the United States measures the prices consumers pay for domestic purchases of goods and services, excluding the prices of food and energy. Hmm. They say the central bank has a 2% goal. It's pretty much what they want to get um, interest rates back down to, or inflation. Shit, they want to get interest rates down to zero. They could. That mean everything's gravy, baby. Naturally. Let's go back to these charts, man. So yeah, we got some news events coming out. Nothing too crazy. I think for sure. What's that? Tuesday. Yeah, Tuesday should be a nice evening move. 7:30. That CPI indicator for Australian dollar. So be mindful of Tuesday evening. There should be some nice moves, and then of course Thursday will finish it off for the week. Like I'm saying, I'm pretty sure some people should whatever pair you trade, if it's the this USD or the USD this, on Thursday, that initial jobless claims and continuous jobless claims and the 4-week average, that comes out every Thursday, every week. And I'm pretty sure it's people that's trading just that news event weekly. Because, I mean, if something is consistent like that and you can find patterns based on true fundamentals of jobs and the way the market is moving based on interest rates, like shit, that'll be like your entry to set you up for what price will do for the next week. Like you can get in on Thursday ride Friday and let the next week just take you. Like damn near what I did on this trade. Let's go back to the charts, man. If you look at my entry on Thursday, that ain't nothing but jobless claims. So we go up here, yeah. That was an engulfing, then a retrace, then we had another engulfing setup right back off of that little support we had out the 1 hour right here. Retrace back up, didn't really get a clean retrace. It kind of tapped back higher, so one could call that a fake out to the upside. But then it reversed back down, continuing on this bearish pattern, also giving us an engulfing pattern that was at 12 noon. But we had one at 8 a.m. coming from a London sell-off at 3 in the morning, testing those highs, wick rejection, and a sell-off. And that was all Thursday for the jobless claims. So just like I was saying, this could be a setup that most people would take. That one trade setup they're looking for the week. They only trade the news. And when you find a news event that comes out every week, no matter what, like you got NFP that comes out once a month, CPI once a month, but jobless claims, they monitoring that. They are monitoring that weekly. So that's money. That's a money grab based off of how well the economy is producing jobs and how well those jobs are getting filled. Because we could create jobs all day, but if they're not actually getting filled, what are we doing? As far as real progress, what are we really doing? But yeah, while we wait for that second 15-minute candle to close, like it's starting to retract what it was trying to price back up into. We're gonna we'll zoom out and look at last week overall. Let's see. So last week started right here. It's 8 to 9 right there. No, this is 22 is 10, 21 9, so 8 to 9, yeah, 20. So that's when we're live right there on this rejection, this bearish engulfing that we got into. I believe we took profit right here. I know I did. I think I did. But I think we took that sale on the live and was talking about it. But overall, we were targeting that old consolidation that I was mentioning earlier in the live today on the daily time frame, and I'll show that shortly. But I just want to put a vertical line here so we can notate the beginning of last week on Sunday so we can see how the previous week played out. So we go here, Sunday, bam. That's how we started. That's Sunday. Okay, let's zoom out. So if we look at the daily, just to go to the lower time frame, I'm gonna put a box over the old consolidation right here. I'll take a horizontal. I'm gonna notate these highs. I'll duplicate that, and then we're gonna note the lows. So we're gonna go back, and this is basically that's a consolidation box I was speaking of from February 26th to March 6th. It's like a little 6-day little consolidation. And last Sunday, we talked about price reaching into those levels. And here recently, I told you about, you know, Fibonacci and how the 50% level is a good area for looking for a reversal as after you get a retracement on a trend or break of support or break of structure or however you want to look at it, and you get a retrace. Typically 50% is a good level to start looking for retraces and to catch counter trends or a continuation on the trend. So with that being said, we're going to mark 50% of this. And we could just do it in price. We can get a ballpark. Let's say that's 67.20. This is 67.70. So that's about 50, 25, 20, 45. So we're going to take this, duplicate that. I'm going to put it at 45. And I'm going to change it to a dashed line. Bam. So now we got the midpoint. And that's all I was looking for, price to reach into that area to look for sales. So here on Sunday, we caught this engulfing bearish. I think we took profit right here, right up in this area. Nice little 10, 20 pip profit, I think that was. And let's see if we get any more setups. Coming here on Monday, we get a nice engulfing at 6 a.m. Again, take profits right here. So that was a nice 10 to 20 again. Then as we continue into the evening, we get a nice bearish engulfing off of this nice strong support here. I mean resistance off of these highs. That was a sweet setup. Again, take profit here. As you can see, exactly what we call our take profits. Getting it in early is great for you as a trader to get the bulk of the move, because once it gets to support any kind of consolidation, it's just going to sit there for hours. And just like you can see from 2 in the morning to 9 in the morning, that's 7 hours of just consolidation that you don't want to sit and hold and trade when that's pretty much all it was going to do. Trying to get this, that's cool. If you can get that and be truthful with the pattern that's forming, you would, if you are waiting for this, then you would have to put your stops at least above here, or at least like the mid ground of this bearish move, this whole little extension that it moved extra on the downside. I would say at least to the 50%. If it gets up here, hence you can see how I started giving some rejections right here around that halfway point. That's a good way to get out, if you hold it. But as you can see, if you did hold on to this trade and kept your stops above the previous swing, you would see that price eventually came back up and took you out anyway. So getting out initially is better for your time in the market. You don't want to be sitting in 18 hours just to get out at a price that you could have gotten out in 5 hours. you know. And that also leads to, don't be greedy. Get what you can get and get out. You never see bank robbers taking every single dime out the bank. They get what they could get and they get out because it's timed. Bank robbers, they structure their time on how they go enter, when they go enter, what door, what time of the day, what day of the week. It's all timed. And they practice time, hopefully they do. So you gotta treat trading just like you're robbing a bank. You don't want to be sitting there trying to get every single dime, every single dollar that you can get off of a move. Get what you can get out. If you leave some money behind, so what? The main thing is you didn't get caught up in consolidation. you know. So just keep that in mind when you wear ski mask, with the eyes cut out, the mouth cut out. Wear that while you're trading, so you could be already in the mind frame of a thug that's about to rob the markets for whatever you can get. Because the market's always going to leave the front door open. It's just like a bank. You could walk in any bank. It's pretty much a public situation. Anybody could walk in. They might deny you of how you look. They might, ask you a lot of questions if you walk in there with your jeans sagging. You got holes in your shirt, or you got shit on your face. Your hair ain't done right or whatever. You just not looking the part. They may try to question you, but if you got a log on and an account number, that's something they can't deny. So basically, what I'm just saying, get into the market, get what you can get out. So let's continue what I was talking about. So we did get that sale there in the morning or in the evening, Tuesday evening. Following into the morning, continuing with the bears, we get another engulfing sweep for those morning traders. Nice little setup, 9 a.m. And that's like I said, that was that continuation. So you probably would have locked in 10 to 20 pips in profit and let it get stopped out, which probably would happen. Then you get this big reversal. No buy setup on this. We did get engulfing here, but that wasn't a good setup. I mean, you in consolidation here from the bears. Who's to say it don't turn around and just melt? So that wasn't a good. Yeah, it did work out, but that wasn't a good ideal setup. Another ideal setup we get here is a bearish engulfing at 3 a.m. If you were up early enough, you would have caught that. If not, there was another one at 7 a.m. trading back down into this support right here. Consolidation, like consolidation. We get a sell into that consolidation again, or those lows of that. If it breaks lower, cool. If not, you probably would have locked in maybe 10, or this probably would have been a break even, or maybe even a loss. We're taking this sell, stops above here. If you got into this and maybe, like I said, put at break even, I can see it at best. That would be the best scenario. You got out at break even. Nonetheless, the market did create at 10 a.m. a buy scenario situation. I try to see. Same thing twice. Stop loss below here. Never got hit. Take profit would have been up in this area. Of course, highs would have worked. We do have old levels that we did reach up into here. But that was the first signal right here. And this is the 22nd, which I think was Wednesday. Yeah, that was the first sign. And also, this was, I want to say, Powell was giving a speech around 1 o'clock, 1:30, and they were talking about interest rate increasing. So I think that was a news event. That's why the market popped up like it did. And now that was a sign to let us know that, one, we did what we was gonna do. We tapped into this old consolidation. This whole area is the whole daily consolidation, old consolidation from February 26th to March 6th. We tapped into that zone. Not only did we tap into that, but we pierced right through the mid area. So if you would have got into sales right here, it would have been a sweet area. And you probably would have captured, what is it, like 60, 67.45. Do we have a 66.45? Nah. You would have got at least a nice little 30, 40 pips. Not too shabby. You feel me? Then again, we get another situation when market priced up. Notice how throughout all this manipulation here, they don't just give you easy no-brainer setups. This could have easily been an engulfing situation, but no, price kind of hovered right here. Didn't go too high to engulf this, just kind of hovered. Then the next hour, didn't get too high, still didn't even close above the open of this candle to engulf it. Just kind of close right below it. And then we get another bounce of push. And also realize that first initial push that closed above the open of this candle, which would have gave us an engulfing scenario if this would have happened or this would have happened. This strong push out of that area. Notice, look how price comes right back to that area. Like this is the prominent candle. This is the godly candle. These two are weak. Why didn't you engulf it? Why didn't you engulf it? Couldn't do it. This one popped out there like nowhere, and that's where it retested to. Bam. And not only did it retest that, but it did right around that 50% equilibrium that we talk about, especially right here. So that would have been a good. And I think this is also a nice little a fair value gap fill that price tapped into. Bam. We had a price gap right here. Price came down, tapped into it here, rejected. Came down here, tapped into it, rejected, and then we get that bullish run we see. But like I said, we didn't get a setup that we like, the engulfing setup, so we didn't really take those buys. Henceforth, it came at midnight, noon. So we pretty much out of the market at like 9:30, 10 a.m. So that wouldn't have been a setup we've taken anyway. So with that being said, we do get another engulfing setup at 4 a.m., which my screen. Are we still locked there? Yeah, we still locked there. So we did get a an engulfing setup at 4 a.m. off of these highs, and look how price just smoothly just kind of touches and sways over that 50% level. Like it's power in this, man. Just draw this up for nothing. This is all from knowledge, learning, reading, studying, practicing, back testing, years and years of that. Like I wouldn't even put this up here if I didn't use it if it wasn't true. But bam, we sweep that. Nice sell opportunity for London. Then New York takes over with that sale. Get a nice engulfing. Like I said, we get rejected back into the support of consolidation, followed by another engulfing at noon. Like I said, we don't really get into trades around that time frame, but this would be a good scenario to let you know that your entry was valid and the sale that you entered in should continue to play out. And we see it did continue to sell off. We had targets here, ultimately targets here from the low of Monday. What's that? That was Tuesday. Wednesday. Then we get this Thursday BS up here. And then Friday. And Friday was nothing more but a continuation again, early in the morning, 4 o'clock engulfing off of London rejection. And we just get a continuation on sales. And here we are now, Sunday engulfing. And we got price starting to reject after this retracement is starting to do on the 15-minute smaller time frame. We get another engulfing here, just like you see here on the 15 minutes. So it works on all time frames. I would challenge my scalpers who predominantly look at the 1 minute or the 5 minute, 15 minute for structure. Take a look at the engulfing setup for those smaller time frames for confirmation. A lot of people look for liquidity grabs and fair value gaps and order blocks and whatever the case may be. That's the new popular term right now with small money trading. But the old candlestick patterns still hold true. Nothing will trump that because that's what we see. Until they change the formation of what we see. Yeah, we do have Heikenai shit. We do got line charts. We do have open, high, low, close um, type of charts. But as far as the popularity goes and how most patterns and indicators pretty much are formed, we use in the candlestick charts. And those patterns that form based on, shift in market structure, volatility, random news events, economic events that happen in different countries. We see trends in the market and the patterns are shown and they repeat themselves and they get named and documented and people teach and train out these patterns and they hold true because other people are trading the same patterns. We see it and it's true and we can name it and we can call it something. And you can tell your next friend about this trading pattern and the style that you heard about. And lo and behold, 50 years later, you got thousands of traders trading the same pattern, you know, in conjunction with what the central banks and hedge funds and large institutions are doing. Who knows? We all got certain insight. People have talked about what the banks trade and how they trade, but nobody is really walking into those rooms and really saying, unless if you are, and you probably signed some type of document that says you it's probably in your best interest not to tell nobody what's going on in these rooms. So, with that being said, we got very limited information, but we do have patterns, and patterns repeat themselves, and um, we can trade off of these patterns and teach ourselves what the market is trying to do next based off the patterns that we do see. And just with a little bit of time and effort and back testing, you'll be good to go. Like I said, in golfing is what we look at only, but there's Evening Star, which is a lot of engulfings come out of that. Evening Star, Morning Star. They got pin bar setups. People could trade off of pin bars or dojis. Just looking for those and knowing when we see that, when we see any type of indecision type of candle form, we know what's coming next. When you can track that and pinpoint that, then you know you can create that into a strategy and test it out and see how viable it is. Because back to our favorite word of the year, if it's not sustainable, then it won't be profitable for long. You know, anything I feel with time can be profitable with the right tools in place and the right mindset, but overall it gotta be sustainable. Whatever you're doing, if you're making one burger or if you're making 1,000 burgers, you have to have a model that's sustainable to keep you open in business long enough, to where you can weather certain storms that the economy will try to throw. Other than that, if you're doing things that are not sustainable, then you probably won't last a good year or two before you're out of business. And most businesses, like from what I heard from Supreme God, we came to realization that most businesses that do have a long run, you know, they hit right around that 25, 28-year mark before they dissolve or sell off. So basically, to say it's very rare for you to even be in business for over 30 years. So if you are, congratulations, you did something that a lot of people didn't do. And possibly the reason why they couldn't last that long because they fell short of sustainability. They probably got them to 10 years, 15 years, but if they didn't last 30 years plus is because they can sustain what they were doing. It probably was something that was working with the current economy. And once we get shit and the economy changes, and you can sustain what you're currently doing and what you've been doing to grow your company, then you typically make shifts more so in the downward trending formation, meaning you cut jobs, you I don't know, do stock splits if that's a downward trending situation. Close down locations, long list of things you can do. See if I get somebody hop on this live, talk about this average truth range. We're approaching the close of this hour. Let's go down to the smaller time frame and see what type of structure. Yeah, we got 2 more 5-minute candles before this hourly closes out. And who knows, we might stay in this little consolidation box like we have here. Get the other one out. See how we break out of that consolidation. Notice how I drew that box based off the 5-minute time frame and this little consolidation. What I saw, I didn't draw this. I just chose this little small area for consolidation, and that coincides with the hourly smoothly. This is a consolidation we see at the hourly, and I can define this more and drop it lower, but nonetheless, these little breakouts, this retest, this was the candle to continue higher if it was going to. But we had an engulfing, basically a reversal and a continuation in the bearish trend, and we're gonna see how this next hour is going to continue to see if we will complete the sell-off that we have started for the week. Just to let y'all know, the I'm gonna give y'all the exact day that we're gonna start to go live Monday through Friday in the mornings, starting at 6:30 a.m. and we'll be going for a maximum of 3 hours. But if we get our trade set up and we out the market within a certain time frame, then we'll just end the live then. But we're going to start it on the 3rd, April 3rd. So that's gonna be sweet. First week of April, right after Sunday. We're gonna start that live and get it popping. So I have daily content for y'all, so y'all can. Oh, we got Supreme just hopped in right quick. Last little bit of the live. What's popping, my boy? Put your mic on. Damn, that's crazy. I can't hear you. I see you, but I can't hear you. And it's not showing you muted on my end. My laptop time is off. It says 9 o'clock. So yes, we did get a close on this hourly. We got a little rejection from this area right here. I could see price pushing higher to test that old high, the previous hour. It may try to get as far as up to test the structured high right here, but I got my money on sales after this engulfing, so we're just gonna hold this trade and see how it plays out. And like I said, y'all can tap in on the Telegram. Y'all hit us up if y'all want to join the Telegram so y'all can keep updated on what we got going on as far as how we calling our trades throughout the week. And like I said, it's simple. It's basically just engulfing patterns. That's all we're looking for on the 1 hour. And the specific patterns. It says it's an engulfing that's followed by. Whoa.
Yo, you can hear me?
Yes, sir.
All right, all right. You about to what is about to go off in like 10 seconds?
Nah, no.
Okay,
I be ending it at 9, but I could go as long as I want. So we
okay.
good.
Yeah, I had entered a little.
Check all this shit out. What you said? You into the what? Wish I could remove this shit.
Part. Can you still hear
I
me?
ain't. You had cut off. You back now though.
Oh, I guess when I switched screens, I said I had entered a short trade. I think Friday, based off the day charts, based off
Oh
the
yeah.
Haki Nashi, the momentum. Um, so and
On
right
what
now,
pair?
on
Okay. Yeah, I'm still in a little tester trade I had from Friday morning. I mean Thursday morning.
man, I don't know what the. I'm actually in a euro dollar. I thought it was the Artie dollar. So, so whatever I'm about to say, I don't know how relevant.
I mean, shit, it probably still dropped because the dollar increased interest rates. So any pair traded against the U.S. dollar probably dropped, unless if that unless it's the pair that's in question is stronger, which I think the dollar is stronger than the euro right now. So if you in the Aussie dollar, Euro dollar, the German dollar, GU, anything like all of those pairs should be sold off probably from last week, just based off of fundamentals. All right, you
Yeah,
back?
yeah. You
You on
can't
your
hear me.
laptop?
No, I'm on my phone. That's the thing. I
Man, you
always
got yeah. Go on a on the Telegram group and click that link from your laptop and see how that connection is.
I don't got no webcam on my the reason
Oh,
it's cool. I just I was switching screens. I thought you still could hear me when I switched the
okay.
screen, but I guess not. But
Yeah.
it actually was down. I went down 15 pips, but now it's down like 8. So and that was on the sale. So I guess the euro going down, the dollar still strong for whatever reason. But ultimately
Yeah,
though, I do see a downtrend on that pad. But let me switch over though. I mean, but as far as the
that's
ATR,
why I said. That's why I said with the interest rates being increased, any pair that's getting traded against the U.S. dollar should be bearish right now.
right, right,
Yeah.
and that's when I. Well, I'm about to switch to the app and then come right back. Let's see.
Just take
Yeah,
it
I was
one
still.
by.
Yeah, like you're saying, everything. I guess because the interest. You say the interest rates went up.
Yeah, interest rates went up, so that made the dollar stronger. So any
Right,
pair like the GU, AU, EU, any of those pairs where the USD is second in the
right.
currency uh,
Yeah,
pair, then yeah, it should be bearish.
yeah. Definitely looking at the Audi dollar on the Hockey Nashi, the day chart, the momentum, which is the momentum is you got two bearish candles on the Hockey Nashi. A lot of people don't know about that, but that's like I said the other day. It pretty much shows you the trend much better, much like. Can you see it? Can you trade to the Hockey Nashi bars?
Let
It
me
right there
change.
where it say candlestick. I think you probably could.
Let me see if I got it on here.
Most apps have it. But I usually get some good entries with that. Like I can't think of too many times where it failed me. Maybe if I get on them smaller charts, I probably got burnt scalping with that. But on the higher time frames, the momentum don't lie.
I Let me pull up this other chart because I gotta go
Go
to.
on trading view.
That's why I said I gotta go to TradingView.
Yeah.
Let me share my TradingView screen right quick.
That's just good for like I said, depending on what chart you're on or whatever chart, you could easily see the momentum, the trend. You could easily
Right.
see the trend if the trend is increasing or decreasing. And that's what it's about. You want let me see. Yeah, this thing weird. This definitely made for computers.
As I'm saying, if you was on a computer, you would be able to see better. You probably won't be
Yeah.
to. I won't be able to see you because I ain't got your video on anyway.
No, I guess I just try to zoom in and you basically can't
Oh yeah.
on the phone.
But
Yeah, that's
basically, these are these are regular candlestick patterns. So if we go to the options, I should be able to change this.
nah, you go to the bars where it say right on the right.
Oh,
Yep. Yep.
bet.
Yep, right
How
there.
can I
I would
shit?
favor that thing. Now look, it's not much different, but you can easily see where the trends are starting and stopping, right? And where it's getting weaker at.
Yeah,
That's your entries and exits. If nothing else is your exit. Like this is probably the best exit indicator.
right. To see
Like
where you got indecision candles as far as big. defining candles.
Now see
Like
with this, you see how they got the wicks. The wicks don't mean see you only gonna have a wick on one side with these. Basically, when you see no wick, that means add to that position. If it's red with no wick, that means sell. If it's green with no wick, that means add on. You see what I'm saying? Now, if you go to the last few days where it kind of was choppy, it was like all the way over. Yep, around that. No, the last couple of days. This is the day chart. Oh, that's the hour. The last few
that's
hours now. Zooming in. Well, yeah. You can see it was a little chop. Those is pretty much not really
right over here.
giving nothing. Like it's trying to go bullish, but it's not. You see, like, but the bear trend is definitely over. You see, yeah, right around there
With
where it got that. Look like
all the
you entered right
consolidation.
on. That's an entry where you got that
Nah,
sell,
what you talking about?
that little down arrow. I think that's an entry.
Nah,
You
this is our indicator. This is the indicator that I made.
what it's telling you.
It's to enter off of engulfing candles. It show better on the candlestick pattern. Like when you look at the 1 hour and I got candles, like
Right.
it point out all the engulfing setups. See, like down that was one,
Okay.
that's one,
Right.
that's one.
Now
But
go
that's what we
back to the
trade
hawk
off
and
of.
notches. You could really it should go right with it.
Yeah, it do. It just show only the engulfing candles. See, like bam,
Right.
that was engulfing. This was in kind of engulfing that one.
Yeah.
You know, high Kanashi is not as smooth as regular candlestick, but it do show
Yeah. Certain
momentum. It show
indicators
momentum.
you gotta set the indicator for it.
All right.
But
Just talking about
basically
like candlestick structure. Like it be like the closes and the opens don't be like right next to each other type shit.
no, they never will because they don't use the actual close and open price. They use the
Right,
average. They use the
right,
average
right,
of the high and the low.
right.
It's like a range. So but yeah, this ain't fun though. It's not the best. I wouldn't use it too much for entries. They got much better shit for entries, but just to kind of like get a quick analysis or
Right.
to know if you should get out of a trade. But I do use it for entries. Like I just entered off it. I see um bearish momentum on the day chart, and that's the thing. I'm looking at the day charts at least with this. Um,
Right, because you got more of a swinging type of mentality on how you looking at
right,
setup. Yeah, you looking
right.
at 4 hour and a daily and all that
So
type of
yeah,
shit.
boom. Go to the day right quick just so I could see what I'm seeing. Not that zooming. So just imagine, like, okay,
That's the day right there.
yeah. So you see how all them candles are red, right around in that area. That was all money, big money too, because it's the day charts. You see now when you on the smaller charts, if you catch a move, that's cool, but it just worked more on the bigger charts. Now, yeah, you gotta wait longer, because like this sale that I'm in, it might not, it, it might be to the middle of the week, next week, whatever, before it start really, you know, uh, going that way. If it do, now the ATR, I got my ATR. I mean, my stop loss set at 1 ATR with let's see, all the dollar.
And you gotta have larger take profits and stop losses on the daily because even like on like recently on this engulfing daily, you had two following candles, daily candles that wicked up that would have hit your stop loss on that. Nonetheless, the market still ended up going bearish because all it was doing was, if you could see, these two wick rejections we had off what was that on the 23rd, 22nd
Right,
and 23rd was rejecting off of this old consolidation right here
right.
from February, end of February.
Now see. You said if I would have had if it was a sale, I would have
Like
probably
right
got
here,
stopped.
right
Now
here, this
let's say if I
engulfing sale. Cause see, I had this
right now,
engulfed.
right.
Hmm.
Let's say I entered at the bottom of that red candle that you just was touching. Now
Right,
let's say what number that is? 66. What? Because it's kind of
68,
small.
66, 70.
70. So the ATR, for the AUD is like 77. So
Okay.
I'm going to put my stop loss 77 points higher, pips higher. You see?
Okay. And that would have put you at, let me see,
So
70,
that's like should be 4.
67.40.
Yeah.
And you would have got stopped out on
Yeah, I
that
would
one.
have got stopped out, but I mean,
I see, but yeah, that's a good stop
you see,
loss
that
to
I
have on that.
barely
Yeah.
would have if I would have went to just
Nah,
80. Let's say if I went 80, you see what I'm saying?
still would have got stopped out. But I
Okay,
get you
well,
though.
but that's good though.
Nah, but I
That's
get you though.
good.
I get
That's
because that's why
good
I would have
because
put
if
my
that,
stop loss though. I would have put it like slightly above, but that would have been a good area to put your stop loss. Like that's
yeah,
not
I mean, because if you keep going
for
too
like
much
risk and
past the
reward.
ATR,
Yeah, risk
you
to
just
reward.
taking money out your part. Yeah, it's
Yeah,
the risk to reward. That's what it's about. Because
yeah.
that 70 is the
Because if
stop
you
70,
going for
80.
seven, yeah, you got to be going for seven and more for your
We
take
going for
profit.
100, 110, 120 on the
Yeah,
take. You see what I'm saying? Not
right,
140. We ain't gonna double it, but
right,
we gonna go for like 50% more than when we than
right.
our stop loss. That's
1.5 and one.
1.5. Yeah,
Yeah.
1.5. One to
Mm-hmm.
1.5, or however you want to look at it.
Mm-hmm.
So, but yeah, we would have got stopped right there. But let's say if that, because I mean, that was kind of a bullish run, right?
But if you know, it was, but it was a bullish run because of news. Interest rates came out. That was interest rate news.
Exactly.
So that's why it
Not
went up. It was
right.
just retesting up. Now that would have, if you would have got stopped out and you realized why it went that high, then you would have got back in for sales because you know why it was going up that high. If you looking at the daily time frame, if you looking at it
Right.
and you
Yeah.
see this,
This
you
just
see this consolidation right here, this old consolidation,
right.
and you
It's
know
gonna
prices
test
could,
again.
it's a test that, and that's
Yeah.
exactly it did
So
it
it's
twice.
gonna come back down to the bottom, and then it's gonna test this top area where you at again. It's
Right.
gonna come down there
Yeah, because that's
and go
equal
back
highs
and
right there.
test.
Yeah, it's probably
You
gonna
know.
break through there and take out more liquidity to drop
Yeah,
down.
and that's what it looked like it was about to happen on that bar where I got stopped out. But you say that was because of the news. But see,
Yep.
if it would have ran up, wouldn't I been protected?
Most likely, if news, yeah, if it wasn't
I mean,
news,
I was gonna I'm stopped out anyway. So if it would have ran up more, I would have kept all that money in my pocket. You see what I'm saying?
facts, facts.
So because basically it went against me a whole ATR. I
Right,
shouldn't fuck with that. You should take that as you're wrong, buddy.
right,
Like you're
right.
wrong.
The
And
whole daily
technically I
range it went
was.
against you.
Not then flip right back on the next day, kinda,
Facts.
but the stop loss is to keep money in your pocket, you know. Like I was using any like the video you just sent me. It was just talking about experienced traders, like how you start trading. The mind you enter when you start trading is not the mind you need. You know, he was
Man,
saying the survival mind and a long
man,
term mind. Like I
man.
got the survival mind. I don't mind getting stopped out. Like I love a good stop loss. I didn't blue accounts, so the stop loss is healthy. Like you basically do the same thing over and over. I don't care what your rules is, what your shit is, but you might want to have it mathematically.
Like you should be happy that your broker even got a stop loss because if it didn't,
Exactly.
you would be way more asked out than you are with it.
Facts.
Right.
But
Yeah.
people, everybody, like for example, niggas would have been pissed off at that stop loss. They would have said, "Oh, it was too tight." I mean, now some people put 1.5 ATR or even 2 ATR. Like if you want a real loose one, go 2 ATR. But that's a bigger loss in your pocket when they do hit. You see,
Yeah,
like
that's
you can go 2 ATR because it can happen. It's a slight chance that a market will move twice the speed that it don't usually happen. Like you ain't about to see.
I would
You not about
only
to.
do anything like that if I'm taking a sale and I'm going 2 ATR stop loss at a high resistance. Like I'm taking
Now
a
look.
sale from the top.
Now look. This something I started doing. Because you do want to enter at the areas of interest. Well,
Right. Right.
I mean, yeah, that's the
Like buying at support and selling at resistance.
yeah, that's the liquidity zone.
Right.
So you do want it. So look, if you just okay, well, at the what you call it, the swing high, swing lows, right? So if you enter there, you could just put your stop one ATR. You see what I'm saying? From
Yeah.
there,
Yep.
that increase your shit because
No,
you know where it's going. It's going to the new high, the old swing high, or it's gonna go to the last bottom. You
fact.
see, so I had
It's just a matter of time of how long it takes to get there. That's be the whole
exactly,
issue with a lot of traders because they
and
be
you can
wanting
measure
shit
it
so
because
fast.
yeah, you can
You
measure. You
know,
know, if the AUD is moving 80 pips, then and we got let's say 240, we know that's gonna take about three. It could take up to 3 days just off some basic math. Now it might go 160 in one direction and then 80 back in the other or whatever. That's
right?
still
Because that's the average.
240
Yeah,
exactly because we
yeah. It
using
could
it.
go. Yeah, it could go 100 pips one day. It could go
It
50 pips one day. But the average is about 70, 80 around that in that area.
right, right.
Yeah.
So I
How
mean,
often
and
does the ATR change? Does it change every day,
no,
or is it based on a weekly or
well, it's
yearly
based off
range?
it's based off your whatever
Like,
time frame you're looking at. That's why I
so
look at the daily.
how far does it go back in history to gather information to give you the ATR?
The whole thing, the whole if you could like if you type five you on that's TradingView, you could
Yeah,
type the whole history and you'll see. Type hit I mean hit all. If you hit all and then
all
put
way.
on your right there. Well, like the time frame instead of one
Uh,
day, 5 year.
what you mean,
Well,
like the monthly time frame?
no, not that. At the bottom, like, well, that's not the
Oh,
same.
right here, all.
Yeah, yeah, but that's not going. What that's going to do? Oh yeah, that is 2003. Yeah. So where your
Yeah,
ATR at?
that put it at monthly.
Where your ATR at?
That's the only thing. I can't add it on here because I got these indicators and
Take
I'm
that
in.
other one off. Take the hot. Oh no, shit. You can't.
I be using them and I got it set to
Well,
certain
I'll tell you.
parameters and I
Hold
don't want
on.
to take it.
Hold on. I'll tell you. Hold on.
Yeah, put it on yours because I can't. Let me see. Can I take this off? You know what? Let me see. I could take this one off. 'Cause I don't look at that one. Yeah, I could take one off. That way I can show it on the screen. Well, you said a ATR indicator.
Yeah.
ATR average true range.
So boom. So it do go up and down. It's
Yeah, I got it right here.
yeah. It's and you could actually put a like a trend line on that shit. Cause the ATR it goes from low volatility to high volatility. That's it.
So what is the ATR right now? Like what's
It's gonna always be wherever it's at, right there. Yeah.
so how do you read that?
Wait, put it back. What was it? What was it? Click it.
What-
Go. I mean, go back down. That is. Wait, what? What? This is the what? Forever? What? Oh, this is a month chart, huh?
Yeah,
Okay. So that's
but I did all.
379. The last one is a decimal. So you just basically look at the first three. So that's 379 average two range per month. That means it
Got
ain't
you.
going. You could put a $400 stop loss and you'll be good. Basically. You see the
For
power
that
of
month.
this?
That's what it's
If you would
averaging.
have had a $400 stop loss, you would have been good no matter what this month. That's what that's saying. Or whatever month that was. Now, you know, and see this how I look at it too. Just go to when big shit happened. Go to when that ATR was the highest.
375.
And if you buy, yeah, it's always gonna be different on the daily, hour, monthly. It's always gonna be different.
I mean, it's the highest based off of whatever it closed at, right?
Yeah, see, you go all the way back. You probably well, shit, that's 2013 and shit. But you could basically the
Oh,
Audi
that
dollar.
bitch do go all the way back. God, we got
Yeah, see,
2003.
basically the Audi dollar was more volatile, or you could say
2012, right here. That's the average range was in the 708.
That was a month.
708,
It was moving
no,
700 pips a month.
2012 or 2011, 2012.
And as you can see, basically the AUD dollar stabilized. The volatility got lower, should I say? You see,
And average true range.
that's the volatility.
So when it's high, that means the volatility is low.
No, that means the volatility is high. It's literally
Uh,
a volatility indicator, but it's giving you a little more data. It's telling you, basically, it's measuring volatility in the units of pips. Makes sense. So it's like it's saying is this volatile? Just like Bitcoin was moving $10,000 in a day. You know, like that ATR is gonna be way higher than an $40. You see?
Now, how can we explain it? This is just my analytical mind just thinking.
Uh-huh.
But just see. All right, you see these charts, right? You see my chart, right?
Yeah.
I mean, this the
It
monthly time frame still. This the
uh-huh.
monthly. Now you see this red candle
Uh-huh.
right here. This big one right here.
Yeah.
The average true range for this month is, let me see. Yeah, what a fucking number was
Not yeah, if you make that ATR bigger, you could see more of like hills and curves. You see what I'm saying?
I know. I'm just trying to see what the ATR was for the month. Like it went away. It was showing me.
Oh, you gotta come down to the bottom. Go down and yeah. 475 look like. Wait, go back. 506 look like.
But that's this. That's me going up and down. I could change that all day. I'm just trying to see for this month what was the ATR.
For that month.
Yeah, because it
Oh
was
wait,
showing me.
you gotta literally you
It
gotta
was like
hover
right up in.
over it. Under that hover.
Oh, I know. That's what it was. I moved it. Oh, I got it. I got it.
It's showing. Okay, yeah, it's
Yeah,
to
it's
the
showing.
left.
Yeah, it's to the left. You see the number right here? So
Three.
bam,
Yeah, so
496.
yep,
Right?
yep,
That's what it showed for this. Now that
yep.
candle, you see the size of that candle, right? You see how big it
Right.
is. Now this one in size look like what? You wanna go outside? Yeah. Yo. Uh
You
that
saying that?
was
Uh-huh.
yeah, that's the same size, but the ATR is 708.
What the other one was five. Well, this one
Yeah.
moved more. You see that stem though? See that stem? I mean that wick at the bottom? That's all movement. You see what I'm saying? The price was
Shit.
that low, and then when it's high is that. Now look at that red one. It don't have no wick. So that's all of the. That's the extra little hundred and something right there. You see?
Okay, you're right, you're right, you're right, you're right, you're
Now
right, you're right.
look. Now look. Now go
You're right.
over like the other way, left. Left. Come back right, a little right, right there. Now see how it was red, then they started to go bullish. Zoom
Talking
in
about
that
this one?
ATR, yeah, right. The next one when it went green, and see how it started to go up. Zoom
This
that
one?
ATR, yeah, zoom that ATR in, like make it bigger, like make it taller. That only the ATR thing, right? Keep the screen where it's at though. Yeah, now you see how you can see the curves now.
Yeah.
Now pull the screen back down to where I could see the what you call it with it too. But you see where the ATR start to get like a hill. When they make
Mm-hmm.
a hill, that means the
Mm-hmm.
volatility is increasing. Anytime you see that, you want to enter the market. You only want to enter the market when it's high volatility, basically, because that's movement. Now the ATR don't tell you nothing about price direction.
And another way to find out is just getting in the market when both time zones are crossing over.
Well, that's when
And
it's
so
always gonna be the highest. You see, like
London and New York crossover. That's high volatility time.
right. And pretty much at 8 a.m. Like was it 8, 9, 10, something like that. You could because I looked
About
at it
seven to
every
ten.
day.
Yeah.
Every day it had the same. The volatility is the highest at 10 a.m. So I
Right.
know practically basically that's kind of like the only time I want to get no. Well, yeah, with the AUD dollar. So when you see it pointing upwards, that means that the volatility is increasing. Now you have to determine is it positive, bullish or bearish, and that's why I combine it with the Hakenashi because you could easily see okay, it's bullish and it's gaining momentum, or it's bearish and gaining momentum, or it was bearish and now that it's losing momentum.
Right.
Real fast. So it's not nothing something that people talk about. So it's like it's real slept on, but the Asian niggas know it. Like the dude I was talking the other day with the house and shit, he know about it.
Oh yeah.
Like a mathematical motherfucker know, because it's like this. Like you don't want to you ain't gonna put $100 on $40 stop loss and $100 on Bitcoin because they don't move the same. One of them gonna hit faster.
Right.
So you don't want to, like the British pound, the pound dollar, that should move much faster than the
Nah,
Aussie dollar.
facts.
So you don't want to have the same stop loss, like especially if you do pip stop losses. Oh, you out of there. You can,
Right.
you don't want to say, yeah, I use a 30 pip stop loss. Man, that shit could hit so quick. But on the Aussie dollar, you might be okay with that. You might be.
Right. 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 Right.
Not really though. You need a little more than that, and that's where your
What
lot
you
sizing comes.
I'm about to wrap this live up, but I'm gonna hit you on a Telegram.
For sure.
All right, I bet.
All right.
All right, y'all. We gotta wrap it up. We're gonna see y'all again next Sunday, 8 o'clock, 9 o'clock. FX Bros, man. We out. Peace.